Today's headline is all about the dramatic surge in oil prices. West Texas Intermediate crude, the main benchmark for American oil, soared by 7% on Monday, reaching about $94 per barrel. Meanwhile, Brent crude, which is used as the international benchmark, climbed 6% to nearly $97 per barrel. These are not everyday moves. Such a sharp increase in a single trading session signals that something significant is happening. It's a clear indication that global events are impacting the oil market, and this could have far-reaching consequences for economies and consumers alike. Let's explore what's behind this sudden spike. Understand the impact. It's important to know what these benchmarks mean. West Texas Intermediate, or WTI, is the price reference for American oil, while Brent crude is the standard for much of the rest of the world. When both benchmarks rise sharply, it's a sign that the entire global oil market is reacting to something big. These benchmarks help set prices for everything from gasoline to heating oil, affecting millions of people. So, a sudden jump in both WTI and Brent means higher costs could be coming for consumers everywhere. 6 to 7% jump in oil prices in just one day is highly unusual. Typically, oil prices move by much smaller margins, even when there's news affecting supply or demand. Such a large single-day increase suggests that traders and investors are reacting to something urgent, perhaps a geopolitical event or a sudden change in supply expectations. This kind of movement can ripple through financial markets, influencing stocks, currencies, and even inflation rate. It's a sign that the oil market is on high alert. When oil prices surge this dramatically, it often means there are concerns about global supply. Something may have happened that threatens the steady flow of oil from major producers. This could be due to political instability, conflict, or even natural disasters in key oil-producing regions. The market reacts quickly to any hint that supply might be disrupted, as oil is a critical resource for transportation, manufacturing, and energy production. These concerns can drive prices higher in a matter of hours. Understand the sharp price movement. We need to look at what was happening in the Middle East over the weekend and into Monday morning. The region is home to some of the world's largest oil producers, and any unrest or conflict there can have immediate effects on global oil supply. Traders watch the Middle East closely, and even rumors of disruption can send prices soaring. This time, something serious happened, prompting the market to react with a rapid surge. Before the surge, oil prices had actually been falling. In May, the U.S. benchmark price for oil posted its steepest monthly decline since April 2025, dropping nearly 17% in just 1 month. That's a huge decrease, and it meant that oil had been getting cheaper for weeks. This context is important because the sudden 7% jump on Monday was a sharp reversal of the recent downward trend. It caught many traders and analysts by surprise. The oil market is highly sensitive to news and global events. When prices move sharply, it's often because traders are trying to anticipate future supply and demand. This week's surge shows how quickly sentiment can change, especially when there's uncertainty about the stability of oil-producing regions. Investors, businesses, and governments all pay close attention to these movements, as they can affect everything from transportation costs to inflation. Oil prices are a key driver of the global economy. When they rise quickly, it can lead to higher costs for transportation, manufacturing, and even everyday goods. Consumers may see higher prices at the gas pump, and businesses may face increased expenses. Governments also monitor oil prices closely as they can influence inflation and economic growth. This week's surge is a reminder of how interconnected the world is, and how events in one region can impact everyone. As we move forward, the oil market will continue to watch global events closely. Any new developments in key producing regions could lead to further price swings. For now, the dramatic surge serves as a warning that the market is volatile and sensitive to geopolitical risks. Staying informed about these trends is important for everyone, from investors to everyday consumers, as oil prices touch nearly every aspect of modern life.